Hey everybody, it's Tradiest Trades back with another COT red pill moment for you. Today we're taking a look at the Japanese yen. The Australian dollar, the British pound, the CAD, the euro, the New Zealand dollar, they all have one thing in common. And that is that they've all been set up for weeks here, maybe even more than weeks, maybe coming up on months for shorts. So, what does that mean? It means that the fundamentals underlying the market suggest that we could have a turning point here to the downside for foreign currencies, which would mean upside for the US dollar. So, um, the key is, though, it can take a while for these moves to play out. So while the conditions might be bearish, the price action and the trend may not support the setup yet. So I'm going to share this setup again because eventually this market is going to have a nice bearish turn and there'll be nice opportunities to profit from a bearish trend change. So let's look at the fundamentals under the hood of this market. And just before I do that, just remember, this is to educate you and to entertain you, not telling you to go out and buy and sell anything. So and acknowledge the risks in this market and don't blame me for your failures. And I acknowledge Larry Williams, the man that created the concepts that I use here. So, without that out of the way, let's get on with it. So, the commercials have been super short this market since all the way back here in mid February. So it's been months: February, March, April, May, June. We're in June now. They've been on the extreme side of things on this index point of view. This index takes the positioning relative to the last 26 weeks. So a 26-week look back and shows us how long or short they are. So we know they've been hedging into this move, which is normal. That's what the commercials do. So they're very short. So that's an extreme code. We like that. But we can't just base a trade off of that. We need more than that. So recently, 2 weeks ago on this move up, the advisors, investment advisors, the sentiment got very bullish here, and that's a contrarian indicator. So when advisors get very bullish, and the commercials are juxtaposed to that, that's a nice code. So there's two codes. We're looking for at least three. And up here we see, or down here we see valuation. Generally, overall, recently, the yen has been very overvalued relative to the price of treasuries, the brown line, the US dollar, the green line, and gold here, overvalued. So that's three codes. Let's keep looking. That's enough already there to just leave the chart alone and move away, or move this to our list and watch for a trend change. So what else do we got here? Well, we've got this bubble up. We see this nice phenomenon where the commercials net positioning line in red starts to go down, and then with the net positioning of the large specs, the blue, and the green line, the small specs, creates this bubble. They go in the opposite direction, creates this bubble, this extreme. We see this happens at turning points in the market, right? You see these little bubbles occur. So here we are, where the commercials are generally speaking the most short they've ever been of all time. It was back in April, May, when they were actually the most short they've ever been. But generally speaking, we're still in that same area. Worth noting this week is, what did the dumb guys do? Well, the small guys, the small speculators, the generally wrong public, they actually got really long the last few weeks. And this week, again, they really got really long. In fact, they're the most long they've been, generally speaking. If we look at the green line here, look at going back in time, they've only been this long 1, 2, 3 times previously in history. And these guys are generally, they don't know what they're doing. So that's a nice code right there. Then if we take a look under the hood further at the open interest, which is this black line on the bottom, we see generally on this whole move up, open interest has been increasing, generally speaking. So open interest increasing while the commercials are getting out of the market and reducing their long positioning and getting more short, they're overall reducing their net positioning here. This tells us that the people that are increasing their position are the guys that generally get it wrong at the extremes, basically. So we see that the increased open interest is being held by the large speculators and the small speculators, the guys that will turn on a dime as soon as this trend starts to reverse. In other words, the market is held by the weak hands. The longs are held by the weak hands, while the commercials are extremely short. That's a setup for a nice short. And then we don't have a whole lot to get out of this chart panel here, other than it's a generally bearish time for the Japanese yen to go down to the end of June. And then, as you see, we have quite a strong bullish seasonal to go up on the yen until September. So let's see if the bears can really show up and get the seasonal to play out here. So that's the fundamentals that underlie the market. Now, what would get me interested in actually getting involved in this market? So right now, we're still technically in a bullish trend based on the 50-period moving average is sloping up. the 20-day, the blue line, is sloping down. We have had a bullish trend change back here when we had, I'll zoom this in so you can see we had 2 full range bars above that 18-period moving average, and then we had the price follow through the high, and that for me tells me the trend is up. So what I need to do, or what I need to see rather, is I need to see 2 full range bars from the bears below the 18. Remember, the 18 period is the blue line, and then I need to see follow through below that low. And ideally, that pattern plays out and happens below the 50 period moving average as well, which would give me even more confidence that the trend has indeed changed. And then that basically would present me with nice opportunities to go short on overbought pullbacks. And I just use a percent R. I've got 3 periods on here. The 4, the orange, sorry, 4 is green, orange is 10, and red is 14. And I just look for those to generally get overbought and when I'm looking for sells, and that gives me an opportunity to put my orders in the market. So that's what I'm looking for on the yen, you guys. So to be very clear, this market has not changed its trend yet, in my opinion. Even though the black line, that's a 200-day moving average, a 40-week moving average, is sloping down, we haven't had the full trend change yet. It looks like maybe it's starting to happen. Like, if you're a classical chartist, you might look at this and say, it's looking like we're getting a head and shoulders pattern, and maybe we are. That'd be great, because this setup has been lingering for quite a while here, and I guess I'd be, however it plays out will be great. Classical chartists will love it. I'll love it just because it's an opportunity to go short on a nice fundamental setup once the trend has changed. So that's it, you guys. If you got questions, you can send me an email at tradiustrades@gmail.com. And if you want to get into my free Discord, you can also email me and I'll get you your invite link. And hope you guys found this video valuable and insightful, and if you did, make sure you like, subscribe, and share. You guys supporting my channel is really appreciated, and I appreciate all of you that listen. So have a good weekend, and we'll talk to you next week. Bye bye.